If you've never checked out MVP before, go to the blog. I think it's on the second page of the blog. And I might even have the link up in the members area. You know what? Let me do that right now. Because MVP rocks. How many of you do this on a regular basis? It's kind of like homework. I know it's not the most fun part of trading, but MVP rocks. Margin volatility pips. Let's do this right now. Because I think a lot of you who did this thought, my gosh, this dollar Canada is pretty awesome when you think about it. Dollar Canada takes $2,000 per full-size lot. Full size. There we go. Full-size lot. It's a fairly quiet pair, right? But it's very inexpensive to trade. That right there should get a lot of people's attention. Just how inexpensive it is to trade. Then when you go to the pip value for dollar Canada, you know, I'm talking full size, so if you're trading minis, just divide it by 10. It's $7.50 per pip. Not too bad, right? Okay. Next. What about the price movement range? We've been trading dollar Canada for quite some time, and I'm sure a lot of you have kind of committed this to memory. Your price movement range is actually pretty decent. On the low average, it's about 95. On the high average, it's about 120. The high, 140. So I can just calculate an ROI, kind of a hypothetical ROI, or actually no, a volatility-based ROI, right? A volatility-based ROI, price movement-based ROI, however you want to call it. What do I know? I can grab the low end of 95 pips, right? 1 day's PMR times $7.50. That's $712.50 per lot. So right off the bat, you can make a really easy calculation. You know, what's kind of a minimum, really minimum ROI that I would be looking at? Like super easy minimum. So I would take my initial investment of $2,000. If I were to make a single daily ROI out of the whole thing, it'd be $2,715. I get my $2,000 margin back plus the profit of $715.50, and it's a 35% ROI. Not too bad, right? That just kind of gives you a minimum. Now I can even start to do the ROI based on our profit targets, right? I just talked about 95 pips. Our first profit target was closer to almost 2 daily, right? We took 145 pips off the table, daily and a half. So now, what if I said, all right, 145 times 7.5, right? Now I plug that in, because that was our real first ROI on the initial profit target. So the $2,000, okay, now we're talking about 60%. Our first profit target was 60%. And if you do the actual math, $4,000 for 2 lots. I know this math stuff isn't fun, but gang, I'm telling you, sometimes The trades are in the math. Okay? So 2 lots, $4,000, and then it returned $2,175. So that was my margin. That was my return. Basically 54%. That's on the first exit. And it only gets better from there because the subsequent exits were higher still. 30.50 to 32.85. Right? And it just got better and better and better from there. So when you start doing the crunching the math on those profit targets, how much did I have to invest? You know, one of the things to keep in mind is just from the reality of having to lock up your margin in your account, you know, the New Zealand dollar, US dollar, $1,600, gang, to control a lot. US dollar, Canadian dollar, just $2,000. New Zealand dollar, Japanese yen, $2,400. Canadian dollar, Japanese yen, $2,400. These are inexpensive contracts to control. Aussie US, $2,700. Right? Things get a little bit more expensive when we get beyond that. So sometimes you might look at the minimum margin requirement, for example, of a pound Aussie, maybe of, which is up at $5,400, or maybe of a Euro Aussie, which is at $3,900, and say, you know what, just in terms of how much margin I have to lock up to control that contract, forget the wins and losses of the volatility. Just to control it might just lock up too much of my capital, too much horsepower dedicated to that one direction. So that's where you might say to yourself, you know, what are those $3,000 and less contracts? Maybe that's where I'm going to draw the line. You get to look at your own capital. This is a very personal thing, you know, and that's one of the things I oftentimes will warn people about. You know, when we talk about dollar peso, I know that's a very comfortable contract for a lot of you, but it costs $6,000 to control that, a full-size contract. It's prohibitive for a lot of traders. It's a lot of capital to lock up. I've been doing this for a long time, and even I don't know that I want to lock up that kind of margin on one contract that, one, I don't like that much, and two, the return is, not too bad, but not great. I used a really great example of the euro versus the Turkish lira yesterday. We got a lot of questions about that in the afternoon breakout session. And when I broke down the $6,500 per lot, full size, that you need to control, have to control a single lot, and then the very low price, which was I think $3.30 some cents, and then the very low volatility, I'm thinking my return's going to be low because this pair, number one, has a very low US dollar price value and very low volatility, and yet I'm locking up $6,500 per full-size lot to control it. Where's the ROI there? It's pretty miserable, right? So that's what I mean about that. So I hope this little walk through the dollar Canada was helpful, and we have quite a few of our older trades, which I love, that have just been, we've just transitioned out of them. Quite a few of them.